Welcome back to the Fiscal Axiom. Look, take yourself back to 2008. The entire global financial system is absolutely imploding. Picture the chaos. Lehman Brothers has just collapsed, the Fed's emergency line is ringing off the hook. And the bankers? They're doing just fine. See, while millions of Americans were staring at foreclosure signs on their front lawns, Wall Street executives were still drinking champagne. Then came the breaking news: $700 billion. That was the price tag to rescue the very institutions that caused the mess. And guess who paid for it? You did. Trust in banks? Gone. Faith in the government? Evaporated. The world was furious. It was ripe for a rebellion. And on October 31st, 2008, that rebellion arrived. An anonymous hacker named Satoshi Nakamoto dropped a bomb disguised as a PDF. The question was simple: what if we had money, but no banks? The idea was revolutionary. A currency no government could inflate. No middleman taking a cut. Just math, code, and a ledger everyone could check, but no one could fake. On January 3rd, 2009, the first Bitcoin block was mined. And hidden inside the code was a secret message, a middle finger to Wall Street that read, "Chancellor on brink of second bailout for banks." Subtle, right? This wasn't just tech, it was a protest. Bitcoin was born not from greed, but from frustration. But here's the thing. For months, it was just a nerdy experiment. It had $0 value, until one guy decided to trade this magic internet money for something real.
May 22, 2010. A guy named Laszlo posts on a forum, "I'll pay 10,000 Bitcoin for 2 pizzas." Back then, that was about $40. Today?
Depending on the market, those 2 pizzas are worth over $600 million. Think about that. The most expensive lunch in human history started with a Papa John's takeout. But how does this actually work without a bank? Imagine a notebook, but not just any notebook. This notebook is copied across every single computer on Earth that runs Bitcoin. If I try to tear out a page to hide a transaction, 10,000 other notebooks instantly flash red and scream, "Liar!" That is the blockchain. To fake a transaction, you would need to rewrite every single copy of the ledger on millions of computers, all at the exact same time. Good luck with that. And who updates this unhackable ledger? Miners. They burn electricity to solve complex math problems. The winner gets to add the next page to the notebook and gets paid in new Bitcoin. But here is the genius part. Unlike the US dollar, where the government can just print another trillion whenever they feel like it, Bitcoin is strictly controlled by code. Every 4 years, the supply of new Bitcoin gets cut in half. It's called the halving. In 2009, miners got 50 Bitcoin per block. By 2024, it dropped to 3.125.
This changes the entire psychological script of money. In the fiat world, spending is survival. You spend dollars fast because they lose value. They are melting ice cubes. Governments print money to fix short-term problems, and your savings slowly bleed out. I mean, look at the stats. The US added nearly 40% of all dollars in existence just between 2020 and 2022. Bitcoin is the opposite. It's hard money. No printer, no central bank. Just a hard cap of 21 million coins, forever. This is why people are starting to call it digital gold. Gold is scarce, durable, and trusted. Bitcoin is the same deal, but with one major upgrade. It's portable. Try dragging a sack of gold bars through airport security. You're going to jail. But Bitcoin? You can carry $1 billion in your head, just 12 words of a seed phrase. That is why the big players are finally diving in. Larry Fink at BlackRock, the guy who manages more money than most countries have GDP, went from calling it money laundering to calling it digital gold. But it's not just rich guys in suits. Entire countries are experimenting. El Salvador made Bitcoin legal tender to help citizens escape the 20% fees Western Union charges them to send money home. In Nigeria and Argentina, people use it to protect their life savings from collapsing local currencies. For them, it's not a stock market trade. It's survival. Now, I know what you're thinking.
If it's so great, why does Warren Buffett call it rat poison? The haters are loud. And look, they aren't entirely wrong. Bitcoin is unproductive. It doesn't grow crops like a farm. It doesn't generate rent like an apartment. It just exists, exactly like gold. And then there are the risks. What if Satoshi Nakamoto comes back? He holds roughly 1 million Bitcoin. That's 5% of the total supply. If he sold it all tomorrow, the price would crash hard. But he can't kill the network. Even if the creator himself turned against it, he couldn't change the code without the agreement of thousands of miners. What about the government? Can they ban it? China tried. They banned mining. The result? The miners just packed up their gear and moved to Texas. You can ban a company. You cannot ban a decentralized network unless you shut down the entire internet. So is it perfect? No. But after test after test, crash after crash, and threat after threat, it is still here. It is government-proof, inflation-proof, and arguably, time-proof. Maybe that's the point. Or maybe it's just getting started. So is Bitcoin the ultimate escape hatch from a broken system, or just another bubble waiting to burst? I want to hear your perspective. Drop a comment below. If you found this breakdown valuable, make sure to hit that like button and subscribe to stay ahead of the financial curve. This is the Fiscal Axiom. Thanks for watching.